So let's talk about Cathie Wood. Is she a visionary genius who can see the future before anyone else? Or is she just a high risk gambler whose strategy is, frankly, way too volatile? It's a huge question on Wall Street. And in this explainer, we're going to pull back the curtain and really unpack the blueprint behind her entire approach. To really get the Cathie Wood paradox, you just have to look at these numbers. It's a total roller coaster. In 2020, her main fund, RKK, posted an absolutely jaw-dropping 153% return. I mean, it just crushed the S&P 500, but then fast forward just 2 years and it craters, down over 60%. This wild swing from incredible boom to painful bust, that's the mystery we're going to decode. All right, so here's how we're going to break it all down. First, we'll tackle the paradox of Cathie Wood herself. Then we'll get into ARK's core philosophy. After that, we'll explore the 5 big technologies they're betting the farm on and peek inside their playbook. Then comes the unvarnished truth about performance. And finally, we'll cover the single most important thing you need to know if you're even thinking about this stuff. Okay, part 1, the Cathie Wood paradox. Because you really can't understand the strategy without first understanding the person who built it. You know, a lot of people think she just popped up out of nowhere during the 2020 boom, but that's not the case at all. Cathie Wood is a 40-year industry veteran. She graduated with top honors and spent decades at major firms, eventually managing billions of dollars. But in 2014, she went out on her own to start ARK Invest, for one reason: to invest purely in disruptive innovation without the usual baggage and benchmarks of traditional Wall Street. And that brings us to part 2, decoding disruptive innovation. This idea right here is the absolute bedrock of everything ARK does. It's their North Star. So what do they actually mean by disruptive innovation? Well, it's not just about flashy new gadgets. For ARK, a technology is only truly disruptive if it makes things simpler, more accessible, and, this is the key, if it dramatically drives down costs. Think about what the first iPhone did for computing. It put a powerful, easy-to-use computer in everyone's pocket. That's the kind of massive economic shift they're hunting for. This leads us right into part 3, the 5 converging platforms. ARK believes our entire future is being built on just 5 foundational pillars of technology. And here they are: artificial intelligence, robotics, energy storage, multi-omic sequencing, which is basically the genomics revolution in medicine, and last but not least, public blockchains. You know, the tech behind things like Bitcoin. Every single stock they own has to fit into at least one of these buckets. But here's the real secret sauce. The big bet isn't just that these 5 things are going to be huge on their own. The bet is on their convergence. It's about how they're going to smash into each other and create something even bigger. Think of it like this. AI makes gene sequencing way faster, and faster gene sequencing helps us discover new medicines. They don't just add to each other, they multiply each other's impact. That's where the potential for exponential growth comes from. Okay, so if that's the what, how do they actually find these companies? That brings us to part 4, where we go inside the ARK playbook to check out their pretty unique research process. It's basically a 2-step dance. First, they start from way up high, with a top-down view. They try to identify those huge tech shifts and figure out just how big the potential market could be. Then they zoom all the way in, going bottom up, digging into individual companies to see who has the best tech, the best leadership, and the best chance to win. And their process has some interesting quirks. They use what they call an open research ecosystem, which is kind of unusual. They actually listen to outside experts and ideas from social media. But getting into the fund is tough. A stock has to pass a super high bar. They have to project it can deliver at least a 15% return every year for 5 years. And at the end of the day, Cathie Wood has the final say, a complete CIO veto. And now for the part everybody's been waiting for. Part 5, performance. Let's look at the scoreboard with no sugarcoating and see how this whole thing has actually worked out. So let's peek under the hood of their main fund, RKK. You can see the strategy right here in black and white. A massive concentrated bet on Tesla that takes the AI and energy storage boxes. Then you have Coinbase for blockchains and companies like Tempest AI and CRISPR, which are pure plays on AI and that genomic revolution we talked about. So with all that concentration, how has it done? Well, when you zoom out and look at the last 5 years, the numbers are pretty brutal. RK has actually delivered a negative 6% return per year on average. Meanwhile, the plain vanilla S&P 500 has delivered a positive 15% per year. I mean, that is a huge, huge gap.
And that underperformance has a very real-world cost. According to research from Morningstar, over a 10-year span, the ARKK fund effectively destroyed an estimated $7 billion of investor wealth. How does that happen? Well, it's a classic story. A lot of people tend to pile in after a huge run-up near the peak, and then they panic and sell after it's already crashed, locking in their losses.
So, what's the defense against this kind of wild ride? That brings us to our final and maybe most critical section, the high stakes time horizon. This, right here, is the absolute key to the whole strategy. ARK is crystal clear about this. Their funds are designed for a minimum investment horizon of 5 to 7 years. This is not a short-term trading vehicle. It's built for people who can stomach vicious downturns with the hope of catching massive gains way down the road.
And hey, don't take my word for it. Cathie Wood says it herself. She's on record saying that early-stage innovation is messy and very volatile. So, from ARK's point of view, these crazy swings aren't a bug. They're a feature. It's just part of the price of admission.
So why is it so messy? Well, it's because these companies are what finance folks call long-duration assets. Just think of it like this. Their stock price isn't based on the money they're making today. It's based on a bet about the huge profits they might make 5, 10, even 15 years from now. So when something like interest rates goes up, the value of those far-off future profits gets discounted, and their stock prices can get absolutely hammered, even if the company's story hasn't changed at all. And that brings us full circle to the final takeaway. The entire ARK Invest strategy really boils down to one simple question. Is the promise of a radically transformed future, powered by all these converging technologies, worth the absolutely gut-wrenching volatility you have to survive today? The answer to that question is what really decides if Cathie Wood is a visionary or a gambler. And that's a call every investor has to make for themselves.